Good afternoon. We have made a decision to raise the key rate by 50 basis points to 5% per annum. Today, we have discussed two possible options, whether to increase the key rate by 25 or 50 basis points, and I would like to explain why we have chosen this very option, accelerating the return to neutral monetary policy. The economy continues to recover actively. We estimate that it will bounce back to the pre-pandemic level in the second half of the year. The majority of industries have already completely recovered today. The rise in all other sectors is only constrained by the remaining restrictions, largely associated with the pandemic. Accommodative monetary policy has fully played its counter-cyclical role, supporting the economy at the acute stage of the crisis. Currently, the fast recovery of demand is forming steady inflationary pressure, intensifying supply-side constraints. Households and businesses' inflation expectations have risen notably. They have been elevated for over 6 months. This is a matter of our great concern. High inflation expectations are being translated into inflation movements already now. Moreover, this effect on the steady component of inflation is becoming increasingly stronger. If they are not limited, this will continue to boost inflation. Amid these inflation processes, we need to return to neutral policy faster than we assumed before. Progressive economic growth will continue in this case. Any delay would require us to raise the key rate more significantly in the future, or even to pursue tight monetary policy. After today's increase in the key rate, we have approached the threshold between accommodative and neutral policy. Taking into account the time lag effects of the policy, monetary conditions will generally stay accommodative for a while longer. We will be closely monitoring how the market will be adjusting to our decisions. I would now dwell on the factors of our today's decision. I will start out with inflation. Today, the acceleration of price growth is absolutely obvious across a wide range of products and services. This is caused not only by one-off factors and the pass-through of higher production costs, but also by the stronger impact of the steady component of price dynamics to an increasingly greater extent. In our opinion, this growth reflects the monetary nature of inflation. It is the fast rebound of aggregate demand exceeding the capacity to expand supply that has sped up price growth. As demand is high, this enables producers to pass through their increased costs to end-user prices. Production costs have really risen. Specifically, the growth of world prices for raw products, primarily for wheat, steel, oil, and timber, has boosted production costs of many goods and services in the consumer basket. For instance, global steel prices have surged by 50–70% over 6 months. Prices for the metal impact prices for cars, household appliances, construction materials, garden tools, and other goods. These trends are also typical of a range of other products and services. However, I would like to repeat once again, it is the rapid recovery of aggregate demand that makes it possible to pass through costs into price growth. Taking into account elevated inflation expectations and the nature of inflation processes in general, we have raised our short-term estimate of the inflation path. Previously, we believed that annual inflation would peak in March, gradually decreasing further on, while now we expect annual inflation to plateau until the middle of the year, close to its readings observed in the first quarter. The annual rates of price growth will begin to slow down steadily in the second half of the year as the effect of one-off factors tapers off. However, given the period of substantially accommodative monetary policy and the time-lagged influence of our decisions on inflation, we believe that elevated inflationary pressure may persist until the end of the year due to the impact of the steady factors. In this regard, we have revised our inflation forecast for the end of 2021. The inflation rate will equal 4.7 to 5.2%. This is significantly higher by 1 percentage point than was expected in February. Our decision to accelerate the return to the neutral key rate will make it possible to bring annual inflation back to 4% by the middle of 2022. As I have already said, any delays would postpone the achievement of the target. Moreover, the key rate that would be required for this purpose would be considerably higher. As regards the economy, I would like to stress that the majority of industries have already bounced back to the pre-pandemic level of output. Certain restrictions remain in a number of sectors. First of all, in oil production, where they are associated with the OPEC Plus agreements. The service sector, where small and medium-sized enterprises account for a larger portion than in other industries, has not fully restored yet. The decline here was stronger and still persists, although the recovery process is quite active. Quarterly data on GDP for 2020 confirmed our estimates that business activity did not wane during the autumn wave of the pandemic, in contrast to many other countries. Furthermore, companies promptly responded to the recovery in demand, purchasing equipment, making investments into production expansion, and forming the inventories of raw products and components. Among other things, this is evidenced by the rise in investment imports over the last 6 months. Taking into account high-frequency indicators for the first quarter, we keep unchanged our GDP growth forecast for this year at 3 to 4%. As the reduction in GDP was slightly lower last year and demand has increased, the economy may generally reach pre-pandemic levels as early as in the second half of the year. This will be primarily driven by a more active recovery of households' consumption, which will be supported by growth in disposable income, retail lending, and a declining savings rate. Monetary conditions remain accommodative. Nominal interest rates are close to their record lows. Accommodative monetary conditions support high growth rates of lending to the economy. We forecast that corporate lending will expand by 8 to 12% this year. Mortgage lending will continue to increase fast at 16 to 20%. The rise in unsecured consumer lending, which slowed down last year, has accelerated. In March, seasonally adjusted monthly growth rates exceeded 15% in annualized terms. As the increase in unsecured consumer lending exceeds the growth of incomes, this entails excessive debt burden for borrowers. As before, we believe that such a situation involves significant risks. Therefore, in the near future, we will consider the issue of returning to pre-crisis risk buffers for new loans. Accommodative monetary policy has reduced interest rates not only on loans but also on deposits. Moreover, elevated inflation is detrimental to household savings. Deposit rates often do not exceed inflation. Inflation threatens both people's current incomes and savings, especially in cash. The increase in the key rate will support rises in deposit rates on the one hand and slow down inflation and protect household funds from devaluation on the other hand. Now, I would like to speak on external conditions and the parameters of the balance of payments. We proceed from the fact that the global economy will be bouncing back faster than we expected in February. This will be driven by large-scale fiscal stimulus in advanced economies and the mass vaccination of people worldwide. The growth of the global economy will boost the demand for Russian exports. Taking into account this factor, and the slower recovery of oil production under the OPEC Plus agreements, we have raised our forecast for oil prices from $50 to $60 per barrel this year and to $55 per barrel next year. The forecast for 2023 remains unchanged at $50 per barrel. Accordingly, we have also increased the forecast for exports and the trade surplus. As domestic demand has been expanding, we have revised the imports forecast upwards. The current account surplus will grow to $56 billion this year from $34 billion last year. Now, I would like to discuss in detail risks that are beyond our baseline forecast. Pro-inflationary risks are primarily associated with increased inflation expectations. As inflationary pressure is stronger and supply-side factors exert additional influence on price growth, inflation expectations may stay elevated for a longer time. Consequently, the saving ratio may decline faster, with consumer activity rising above expectations. As always, there are risks related to the external sector, including changes in the geopolitical environment. We have always taken them into account. In a situation where these risks materialize, an increase in volatility in financial markets may speed up inflation, which we factor in when making our decisions. There are also disinflationary risks, yet the probability of their materialization is lower, and they are mostly associated with the fact that demand growth may turn out to be below our expectations. This group of risks may also include a faster reopening of borders, as a result of which demand may shift from domestic consumption to foreign travel. The risk of new coronavirus strains or lower paces of vaccination persist, which in contrast may reduce people's mobility and limit consumption growth, especially in the services sector. If the situation develops not in line with our baseline scenario, we will be responding so as to bring inflation back close to its 4% target over the forecast horizon. And in conclusion, I would like to comment on the future path of the key rate. Today, we have first published the ranges of the average Bank of Russia key rate for a calendar year over the forecast horizon. According to our baseline forecast this year, the average key rate will generally equal 4.8 to 5.4% per annum, 5.3 to 6.3 per annum next year, and 5 to 6% per annum in 2023, which is in line with the range of the long-term neutral key rate. By publishing the path of the key rate, we increase the transparency of our communication, which will ultimately improve the efficiency of monetary policy. I would like to thank you for your attention. But before I start answering your questions, I would like to remind you that we have been discussing the format for publishing the forecast of the key rate for quite a long time, and yesterday we released our methodological commentary regarding this forecast on the Bank of Russia's website. And so Alexei Zabotkin, Deputy Governor of the Bank of Russia, will now briefly outline the key aspects that we would like to focus on. Alexei Borisovich, please. Thank you, Elvira Nabiullina. I will briefly discuss the key moments that have already been, for the most part, described in the methodological note. And I would also be happy to provide additional comments on this topic, in particular why we have decided to use this exact format for communicating the projected path of the key rate, if any such questions arise. There are 3 points of importance. Firstly, the projected path of the key rate is an integral part of the Bank of Russia's forecast. It should be considered and interpreted in the context of this forecast, as well as its underlying macroeconomic conditions and assumptions. As part of the Bank of Russia's forecast, the projected path of the key rate will be updated along with the forecast and the follow-up to each core key rate meeting of the Board of Directors, meaning in February, April, July, and October. Secondly, the projected path of the key rate is published in the form of a range of the average key rate for each calendar year. This means that this range should not be interpreted as the boundaries of the key rate variations over the year. As we can see in Chart 2 of yesterday's methodological note, the boundaries of key rate variations over the year can be notably wider than the range of the forecast of its average for the year value. This is based on the fact that as the key rate changes, it will inevitably be above its average for a part of the year and below this value for the rest of it. And thirdly, it is the average key rate value, and not its value at a certain moment, that defines the monetary policy stance during a year. Therefore, we believe that this indicator provides the most information for banks, financial markets, and, importantly, households and businesses to assess the Bank of Russia's intentions with regard to monetary policy. To assess which level of the key rate in the context of the Bank of Russia's baseline forecast will make it possible to achieve the objective of maintaining financial stability and keeping inflation close to 4%. Thank you for your attention. Elvira Nabiullina, back to you. Thank you. So now we go over to the Q&A. Please, the first question comes from Reuters, Fabrice Yelena. The range of the average rate for 2021 presupposes an average the rate being at 4.8%, which means that the rate may remain at the level of 5% before the end of this year, won't it? I mean, this scenario is possible. It will all depend upon how situation evolves. That is why we pointed out the average range overall for the 2021 and till the end of it. Next question comes from Anastasia Saveliva, Interfax. Good afternoon, please. Yes, good afternoon. I would like to find out, you have raised your inflation forecast by 1 percentage point because previously you gave a certain itemization in terms of which particular factors stand behind such an increase. That is my first question. Second question, you basically said that the monetary policy is in between the neutral and the accommodative so which is it, do you believe? Is it neutral or accommodative? Could you give us your vision? And are you not planning in the near future to change this range? And my third question, don't you see any risks for the economy in the probability of the epidemiological situation worsen, because today, for example, the President announced the non-working days in between the May holidays? Thank you. Thank you very much for these questions. So with regard to the structure of drivers, of factors which could push us towards updating our inflation forecast this year, this was impacted for the higher inflation in the first quarter 2021 because it turned out to be higher than we expected before, higher inflationary expectations. We also note a faster demand recovery, which we believe will sustain. In as far as the accommodative or neutral monetary policy is concerned, if you may recall, indeed, we came out with our assessment of the range of the neutral policy being 1 to 2% in real terms and 5 to 6% in nominal terms, against inflation remaining at the 4% level, and that was a long-term neutral rate. But currently we do see that the inflation is higher than 4%. Therefore, the short-term range of the neutral value could be higher. But yet again, I would like to remind you that the neutral key rate range is a conditional estimate. And if there is additional data that is available, we would be eager to revise it, because currently there is no there are no grounds for it to be revised, but we will revisit this issue based on the information we continue to receive now. And as far as the epidemiological situation is concerned, I refer to it as one of the risks in the baseline scenario which may materialize, but I would like to additionally say that even in this eventuality, we see that the economy is currently showing better adaptive properties to various limitations. And the way the economy reacted to the second pandemic wave, and we didn't notice any declines during that period like the case was in many other countries, gives us the reason to believe that the risks of such a scenario is going to be substantial. Next question, please. Anastasia Saprikina from RIA Novosti Agency. What will be the impact of the opening of the Egyptian destinations to the inflation in Russia? Don't you expect the spike of the currency exchange activities? Does the bank have enough liquidity to meet such a demand? Let me begin from the last point. We don't expect any higher activity in currency exchange because there's no shortage of liquidity. We've got enough of it. But opening of the Egyptian destinations for vacationers and for travel won't produce any major effect because in the consumer basket, Egyptian destinations account for a smaller share. Andrei Bloomberg, next question. Yes, good afternoon, Elvira. Could you please tell us, because in your statement you noted certain restrictions in terms of the foreign travel as pro-inflationary factors. Do I understand correctly that in your baseline scenario you mean to say that the majority of these restrictions are going to be lifted before the end of the year? Another question about the National Welfare Fund. The President said that it is going to be used to invest into various policy decisions. Do you believe that certain currency acquisitions will have to be reduced in order to support such expenditures? As far as foreign travel is concerned, yes, indeed, in our baseline scenario, very gradually we envisage how the borders are going to be opened, and that is why, by way of one of the disinflationary risks, there may be a quicker and larger scale opening of the borders for travelers, and that we will definitely account for in our monetary policy. Now, in terms of spending from the Federal Welfare Fund, the discussion is continuing. There aren't final figures yet, and so we come from our original estimates that this could be in the ballpark of about 3 trillion during the next 2 years, and so in this case, no significant inflationary risks aren't going to occur. And we do see that against the current oil prices, the liquid part of the fund is going to further accumulate. Next question from Pavel Kazanowski from RBK. A more dramatic increase of the rate instead of a gradual increase in between the two core meetings might mean that the central bank will assess the reasons for further increase and that the regulator is not going to really hurry to raise it further. And can one say that such a tough approach to the monetary policy is going to be put on hold? It will all depend upon how situation evolves, because there are too many uncertainties remaining. And so depending upon this, we will consider different scenarios. We do see the risks of having our feet cold, or meaning delaying going back to the neutral monetary policy, because such risks may lead to the need of a more significant rate increase in the future. So I'm of the opinion that we all want to avoid it. Such rates in the future so as to deter inflation, but most probably we will be looking into keeping the rate as is, or maybe reducing the step upwards. So there are too many factors. Shpilevsky Rita from TASS, next question. Good afternoon, dear Elvira Nabiullina. I hope you can hear me well. I have this question. You said that inflation will keep at plateau until the middle of the year, but it would be great to understand, considering these new information, is it possible that there might be new local peaks that will exceed the level of 8% that we observed during March? Thank you. Well, the way I understand it, that if we talk about the annual inflation, then one shouldn't rule out anything, because the high inflation pressure is what we see. But most probably we might say that before the middle of the year, the annual inflation will remain at a plateau. And so we will monitor it further, and we will update our forecast as information comes. Next question from Igor Zubkov, Rossiyskaya Gazette. Good afternoon. 4 questions. So the first one, out of the inflation trajectory path forecast, one may construe that the Bank of Russia may go over to a tough monetary policy already this year. Is it true? Do you expect, the second question, do you expect, due to the key rate increase, that the household savings will stop flowing from deposits into other forms of savings. Egyptian destinations opening, how that may affect inflation. I already answered that question. And the next question, may one say that the peak on inflation is already behind us? Now, what kind of policy is going to shape out this year will definitely depend upon the incoming information and the way we revise our forecast for the next year. Again, I shall remind you that because of the lag in the monetary policy, in our follow-up decisions, we will be impacting more the inflation of 2022. Now, the upper threshold of the forecast of the average key rate, which we disclosed for this year, does show that that might be a moderately tough monetary policy. But I would like to again remind you that if one is to consider the neutral key rate range, depending upon the current inflation and the inflationary expectation, then most probably this kind of policy may be described as an accommodative one, maybe with a bit of a shift into a neutral stance. But this is not the kind of trajectory which is most probable. Now, in as far as seeing the deposits flowing into other instruments, yes, the increase of the key rate as its consequence may lead to a high attraction in such a classic banking product as deposits. Now, with regard to the inflation peak, as I said, that most probably we are at a plateau, but the extent to which the annual inflation might show us higher values, that will definitely depend upon the information we continue receiving, taking into account the facts from the base of the last year, because in March, we went through quite a high inflation, and then dramatically it went down. So statistically, there could be a serious impact from the base. Christopher Dimitri asks his question next from Kaluga. Good afternoon. My question is going to be as follows, and I'm sure that the regions will support me. As one of the reasons behind the decision today, there was a very dynamic growth of the domestic demand. On the other hand, considering the recent Russian Statistical Office data, the households' incomes are not growing. On the contrary, they slightly declined. So my question is about this optimistic forecast. How can you explain this additional demand growth and where the households are going to go in order to, get more spending? Is it coming from spending, or maybe there are other factors that we're not seeing? This is a very good and very timely question because it does refer to the central theses and the rationale behind our decisions back in March and today. Consumer demand. It is true that this demand depends not only upon the current incomes, but upon other factors such as the current savings and standard, meaning to say which share of the current income people dedicate either to spending or saving from the accumulated savings as well, which means the extent to which households may compensate, for example, the incomes they lose at the expense of the previously received income. The next factor is the availability of the consumer lending. And so looking at all these factors, what we conclude is that last year households saved more than usually because, amongst other things, foreign travel was restricted. And so these money can partially be used for consumption today. The retail lending has been growing at quite a high pace, amongst other things, thanks to the accommodative monetary policy. Another important driver is the distribution of income. For the purpose of consumption, what is more important is the wages, social transfers, because that is the main source of income for a sizable part of the population, which is comprises the funds that they use for consumption. And we can see that the real wages last year grew as well. And that is why decline in the disposable incomes in terms of what can be dedicated to the spending was more restrained than everyone expected. But apart from the consumer demand, there are also other components in the aggregate demand, such as the public demand, government demand, investment demand, the external demand, which we also note recovering quite actively. But when we say that it affects inflation, it comes not only from the demand dynamics, but also its correlation to the potential and to a broader supply. And here we specifically witness the problem, meaning to say that the demand in a number of sectors, and it is in the consumer sectors in the first place, is running ahead of the supply expansion, meaning to say that we are currently in a concluding a recovery phase of such a demand, following which the demand growth should correlate exactly to the supply expansion, which effectively means that the monetary policy should be a neutral one. Thank you. The next question, please. Ekaterina Litva, V-Times. The mortgage rates from the market leaders practically didn't react since the beginning of the year to the federal bonds growth in terms of the key rate. Now the subsidized mortgage, represented by a number of major players, have reduced the rates. Don't you believe this is the factor risk for the banking system? Under evaluation of the interest rates by the leading players as an indicator of overheating, which requires response by the central bank. Yes, we do believe that some of the overheating is there in the market. Very quick growth we note in terms of the mortgage loan demands and for the investment class real estate, housing estate, I mean, and a certain decline in terms of the mortgage lending quality, because last year, in order to support mortgage activity, we reduced the markups, for example, for the loans with the original contribution in between 15 to 20%. And so we believe it is necessary now to go back to the pre-pandemic levels, and we're going to have a discussion with the market players shortly. You know our attitude, because we do see that last year the housing prices grew higher than inflation quite significantly, and the preliminary data, we don't have the Russian Statistical Office data yet, but the first quarter data demonstrate that the prices continue growing. And so there is a need to normalize the pace at which the mortgage lending growth, the available housing, so that it wouldn't develop into an extra burden upon the household. And so the banks need to take all these risks into account related to such lending. Next question comes from Tatiana Chubasa from Interfax Agency. Good afternoon. Good afternoon. My question is an extension of the mortgage lending topic, because a month ago, Central Bank published a report about floating interest rates for mortgage lending and what one should do with such products. So specifically bearing in mind the fact that there is some activity in the area of the key rate and the risks are strengthening, has the central bank made any decision to itself about how that product is going to be regulated legislatively or through some decrees? And another question about the regulating the ecosystem, because the central bank published an advisory report, but from the point of view of regulatory activities, for the banks who participate in this ecosystems, this report didn't reflect the kind of activities that the central bank wanted to pursue. We were promised that soon is going to be disclosed, but could you open the veil what the central bank is thinking about? What are the instruments that are being discussed with respect to the banks which around themselves are developing multi-billion ecosystems? Thank you very much for your question. As far as floating rates are concerned, I am convinced that one should regulate these floating rates. It should be done in a regulatory way, because the problem is that there is no such regulation in place. And principally speaking, the banks may very quickly grow their lending to households based on floating rates, which we believe is wrought with some risks, and regulation may do the job. So we continue to receive various comments and considerations. Of course, the banks want as less regulation as possible. We will discuss different options and the possible ones, as they say, of the ranges of the rate if one is to allow for a certain share of lending with floating rates. And so very soon we're going to wrap up this discussion, and based on its results, we will definitely report on our ideas and make them public. Now, and as far as ecosystems are concerned, indeed, there are two tracks, so to say. There are two issues which are interrelated, but at the same time are separate. First of all, it's about an ecosystems that are being created around what kind of an entity, a bank or simply an organization or a fintech company. So that involves assessing the risk of monopolization, the lack of arbitration, as well as the tax and regulatory rules or fair competition rules, so that our national players could compete against the foreign players. But there are effects related not only to the international competition, because we need to have a sufficient domestic competition and the ability to disclose information. Second, it is about the regulation of the banks which start investing into such ecosystems. We are debating it currently. We do see a number of risks in this. I described some of them. For example, the so-called risk, the risk assessment related to the forced support for the ecosystems. It's a different one than just investing into the non-core assets, because of just insolvency regulations and insolvency procedures. And so the banks in case it happens, the banks are going to be limited in terms of what they can do, and they will face the risk of having to support such elements. So we need to assess it, and we want to propose certain regulation. And so closer to summer, we are preparing ourselves, maybe during some of the summer months, we will publish the advisory report on this topic, and we will definitely discuss it with you. The next question comes from Alexei Bogomolov, RBK, Vologda City. Good afternoon. I would like to go back to the topic of inflation. Is it directly related to currency exchange, and is it possible to expect deflation in Russia for the core staples? What should happen for that to be? Oversupply in the market of various staple goods and consumer goods, a stronger competition, or certain government resolutions or decisions? Thank you. And as far as the exchange rate influence is concerned, of course it influences the price dynamics. But the scale of this impact depends upon many factors, i.e., the extent to which the exchange rate fluctuations, how sustainable it is, because if it's a short-lived exchange rate fluctuation, then the so-called transfer effect, this is the kind of an effect which translates into prices because of the exchange rate differences. It could be a small one. Based on our estimate, it's about 0.6 percentage points. If the exchange rate changes for 10% margin. So principally speaking, this is not a very significant transfer effect. And that in many ways reflects quite a low level of general inflation. But if the exchange rate change is sustainable, then this sustainable changes transfer into price is going to be more pronounced. It will be more extensive over time, and it may support the inflationary expectations, may ensue into various secondary effects. So these are the factors that we take account of whenever we decide upon the monetary policy. Now, as far as deflation is concerned, speaking about the local deflation, or seasonal one, for a certain group of products, basically this is a very frequent phenomenon, because that happens against the crop yield being very good, because we know that it is difficult to store food products. And so in the beginning of last autumn, usually in the beginning of the autumn and spring, the producers are hasting to sell their products, and so the prices may fall during such a period. Prices may also fall as the result of certain technological innovations, as we've seen with respect to many equipment, when the new equipment comes in terms of the generational inventions and improvements, then the old equipment is becoming cheaper. But generally speaking, the overall price decline, it is something that looks attractive only at first glance, because everybody thinks that it's good that the prices fell. But beyond that, there could be a very dangerous state of the economy that may come, not least dangerous than the high inflation. What it means that against deflation, consumers are not incentivized to buy because they know that tomorrow the product might be cheaper yet. And it means that as a result, producers and economic entities are not having the same kind of profit. The profit goes down, the wages may be reduced, and that may deter the economic growth. And so quite often deflation is the thing that exactly exposes an economic malady. So, very few countries that face this are trying to counter such a phenomenon. But we believe that we don't have such a risk of a systemic deflation, because currently we're saying we need to control inflation. And to us, it is very important to provide for a low level of inflation of 4% to be stable. And this level of inflation, in our mind, will provide households to maintain their purchasing power, and as well as incentivize further economic development. Next question comes from Dmitry Butrin from Kommersant. What kind of investment dynamics the Bank of Russia forecasts for 2021 to 2023? We believe that along with economic recovery, there will, of course, be more active investment growth, because for 2021, the gross accumulation of fixed capital is going to be between 2 to 4% in 2022, 1.8 to 3.8 in 2023, 2.4%. Next question comes from Maria Stepanova, TASS agency. Yes, good afternoon. I have a question about the deposits. Not so long ago, during the meeting with the regional banks, the representative of the banking community proposed to reduce, or rather, to raise the deposit amount that is being charged income tax from 1 to 3 million rubles. What do you think about it? How realistic it may be? Well, this is the question to the government and to the authorities which define taxation policy in the country. Next question comes from Elena Fabrichna, Reuters. What is the way that the U.S. sanctions impacted the outflow of non-residents from the federal bonds in April? And based on the current data, how their holdings in the federal bonds changed? As far as the outflow of the non-residents in April from the federal bonds, it was not significant. Let me find the figures for you, just a second. So in April, the non-residents outflow from the 1st till 16th of April, sales to non-residents amounted to 101 billion rubles during the week. At the same time, which followed the announcement of the sanctions, the federal bonds were sold worth 43 billion rubles. But one should note that non-residents, they came out not only under the impact of the sanctions, but also because the global rates changed, and so the outflow took place almost from all of the emerging economies. And as far as we're concerned, the risk exposure certainly grew. The next question comes from Pavel Kazanovsky, RBK. The United States, for the first time, introduced the sanctions down on paper, which potentially central banks may issue. What are the negative consequences the Bank of Russia may see here for its operations? And what is the central bank's understanding of the further possibility of the sanctions growing, and specifically the possible impacting the government banks? Can the banks which are controlled by the central bank may be put into this sanctional list? Well, in as far as the impact of the sanctions is concerned upon the securities that are being issued by the central bank, we don't know such an impact because our securities are being issued to regulate the liquidity of the banking sector, and so these are the Russian banks which are buying them. Now, in as far as the further sanctional risks are concerned, or their probability, and where they may come from, and I really don't want to assess that because it is impossible. Most importantly, and I'm always repeating it, the most important thing is to be ready for any way situation develops, to any scenario. So it is, one should not only maintain the current financial stability, but alongside have the buffers, the toolkits that one could resort to for the future. That is exactly what we're busy with, and specifically, one of the reasons as to why the sanctional impact upon the government debt is limited, because the government debt level is not high, and that is exactly the way we need to support it at a level of 30%, which is much less than in the majority of other countries. Next question comes from Novak Dmitry from Chuvasha. Yes, good afternoon. You have partially answered my question, but still, does the central bank has any concerns that because of the higher rate, the lending market may decline, and alongside with that, a greater number of households and companies will be depositing their money rather than investing into the real economy? Yes, thank you very much for your question. It is indeed something that is on the mind of many people. But once again, I should stress that our monetary policy is called upon to provide for such a lending activity growth which conforms to our intention to maintain inflation at the 4% level, as well as supporting the economic growth at the level of its potential. So during the periods of economic decline, when the aggregate demand draws down and one requires to support a faster lending expansion in order to compensate these temporary factors, these deterring factors, so as to push the economy back into the trajectory of sustainable growth, which is exactly what we have been, exactly what we were doing last year. And this is exactly the kind of a counter-cyclical policy. And when the economy recovers, it is necessary for lending to grow at the pace which compliant with the economic development pace. And I would like to emphasize that in our forecast, we express the view that the lending dynamic is going to be positive, and so lending to companies and households will grow. With respect to the deposits, deposits do work in the real sector. It is important to understand that when a person comes to the bank and brings his money, it is not the kind of money that is in the vault like a dead load. It works in the economy because the banks give loans, and so the banks act as an intermediary between the depositors and the businesses. And so, in as far as this is concerned, a high key rate turns the ruble savings or the ruble assets of the households more attractive compared to different alternatives, which also creates better opportunities for the bank to fund their lending portfolio with stable liabilities. Next question to Alexey Borisovich. Alexey Borisovich, please. Evgenia Pismina is asking. Evgenia Pismina, yes, from Bloomberg. Yes, congratulations on the Central Bank of Russia switching to a different higher step of the inflation targeting. Thank you for such an appreciation. Now, like many other countries, you are publishing the average annual key rate forecast, which is a very important step. My question, in your forecast, the average annual rate is quite high, 4.85 to 5.4, even high in 2022, 5.3 to 6.3%. Similarly, you raised your forecast for inflation, but not as strongly as the average rate, which means that big leapfrogging becomes your usual kind of a stride. Well, to begin with, I shall comment that not all countries publish their rate forecast, and the average annual rate forecast We don't know who else is publishing it apart from us, because this is indeed the kind of our approach, but we feel that this is the most informative kind of a way to disclose the expected rate dynamics with respect to the correlation of changes in between the forecast for inflation and the key rate trajectory, key rate path. Well, basically speaking, reacting to the high inflationary pressure in a preventive key rate increase, that makes us achieve the outcome that the inflation doesn't deviate from our target in a sustainable way, but pivots back to it within the second half of the year. And so the kind of policy that we have described demonstrates that against a very consistent policy activity, the inflation will go back to the target. Next question comes from Ivan Schlegel. Good afternoon, Elvira Nabiullina. I've got the following question. Now that you switched over to the key rate increase, you made a few steps, and that is really very beneficial for the banks, because the banks can now increase their deposit rates. And so in this kind of environment, it's interesting, once you achieve the inflationary target, how difficult is it going to be to go back to reducing the rates, because the banks will grow into the habit of raising their rates? Well, it seems to me that increasing the deposit rates is something that is beneficial for the households who are saving, because the interest rates are going to grow. No. In the deposits that the banks are to pay to the households, but in as far as the rate levels, and specifically deposit, including the deposit level and the lending rates are concerned, the level of these rates and the way they evolve is going to be dependent upon the environment, against the fact that the inflation, and if the inflation, that is what we're working for, and we're confident that that will hold fast at the 4% level, and the level of the neutral key rate will be 5 to 6%, and that would impact the deposit rates as well as the lending rates. Of course, as far as the lending rates is concerned, additional significant influence which comes from it in defining the rates for the end borrower will be based upon the risk assessment of a borrower and the project specifically that these loans are being asked for. But if you talk about generally the rates level, we believe that we will gradually go over to the neutral rate range. Next question comes from Litova Ekaterina from V-Times. Good afternoon. I've got the following question. In terms of the presidential address that he pronounced about additional economic stimulus, how that affected the central bank policy, I mean lending to the social projects in the regions, social spending, construction and development. Well, something that we have currently taken into account, and amongst other things, we're relying upon various estimates which were done by the Minister of Finance with respect to the additional incentives costs. We feel that it doesn't produce any inflationary impact, because it is expected that this spending will be funded out of additional non-oil and gas revenue, I mean, fully within the fiscal rules. So there aren't any inflationary risks that we see here. Next question comes from Rita Szpilewska from TASS again. Thank you very much. On more than one occasion, you said that one should finish the administrative regulation of prices. And at the exchange forum, you said that the dampening mechanisms can be extended to include other groups of products. Have you discussed this issue with the government, or have there been any further development of this proposal of yours? Yes, we do believe that administrative measures is something that we should try and step away as fast as we can. But the way we see that the government is also quite eager to switch to the market instruments for the regulation, because the administrative measures were very short-lived. We have an estimate that the inflation of 2020 was affected by about 0.1%. I mean, the inflation towards the end of the year could have been high by 0.1% if it wasn't for the administrative regulation. In the first quarter, this administrative regulation managed with respect to these kinds of goods, and in terms of the direct impact, was able to deter it by 0.2%. But we do see that in April 1st, the prices for butter, price growth sped up, and oil. So we do think that the measures produced a certain effect, although it was a very short-term one. And so we do say that longer term that will distort a signal to the market. Producers may end up in an underinvestment in certain industries. However, there is certainly a bit of an issue, a dramatic price hike for a certain group of products, and that will impact the consumer's behavior in terms of the socially important products. So there should be two mechanisms in place, we believe. A very much purposeful support for the needy, and the second, in a limited number of cases, the application of different instruments which would level out the volatility, different cushions and dampenings. But one should act very, very prudently here, so as to act in such a manner in a limited number of cases where there are obvious cyclical fluctuations. One should apply such mechanisms. Otherwise, in a certain way, even though these activities would have a market nature, but that would distort the market dynamics. And not only that, it will impact the producers' plans, their willingness to invest and produce the necessary goods. Now, we haven't had a very specific discussion with the government about what the toolkit should be, because this is the authority of the government in initiating such issues. But you know, it's a continuous topic that we should switch over to the market-based mechanisms as fast as possible. Well, that was the last question. Thank you very much for your attention, and all the best.